Hello class, hello students, and all newcomers. How are you today? I want to go ahead and dedicate this video to all my loyal subscribers, loyal Patreons, and clients that have been with me since like the very beginning or the first couple months. Okay, this example here is really going to display the amount of, dedication and commitment that it takes to really apply not only the velocity banking method, but to trust in yourself, trust in me when I'm working with you, follow the path, the system that that we lay out together, not just me, that we lay out together. So with this gentleman here, I really like this guy. He found me a couple months back and he started working with me. He was one of the very first people to reach out to me and ask for guidance and help. And since then, not only have I grown in this channel, but he has as well. Okay, so these numbers that I'm displaying right here, this is the actual start of him actually implementing velocity banking at a fast rate now. But before, let me tell you, this guy didn't have a lot of cash flow at first. He had other credit card debt, and we were using credit cards as our temporary debt tool. We were trying to build our credit so that we can obtain a unsecured personal line of credit. We redirected cash flow back to ourselves. In addition to redirecting cash flow, he also converted his term life insurance policy into a permanent life insurance policy, not just any type of life insurance policy, but his own personal tax-free bank that he and I worked together on. We set that up for him. So not only are we paying off debt at a rapid rate, we're getting our credit score right, we're redirecting cash flow, and he's establishing his kingdom for his family, for himself, and establishing that legacy that he can leave behind. And it's just really awesome to have seen this. So if you have been with me for over 4 or 5 months now, you're the ones that are probably getting the most results. Everyone else, I've been getting most of my clients in the last 2 months, I should say. This year has been a real explosion, I should say, of people now really getting it. And I know you guys are enjoying the little bits and pieces of content where I'm really breaking things down even further so that I can equip you so that when we work together, you're even that much more prepared for this concept, for your goals, for your financial goals, for everything. Fast forward up to today, and as we close out the month of February, we have a gentleman here. He's a veteran, making $4K a month. His expenses are, I highballed it around $2,800. Total debt, $170,000. Cash flow anywhere from $1,200 to $1,300. We acquired the personal line of credit for $15K at 15% interest rate. We also have these remaining debts left over, okay? So we've got a $14,000 loan, we have 2 credit cards, we have student loans, and a mortgage, okay? And I really wanted to lay it out so that you can see where the cash flow comes from and how we're able to exponentially increase our debt payoff timeline, how we are able to shrink it at such a fast rate. I'm still getting tons of questions of people really being confused of how is it possible to borrow debt, pay an interest rate here, to then use that money to pay off another debt. It literally just doesn't make sense at first glance. But when you really look between the lines, when you evaluate cost of money, cost of borrowing, when you evaluate the differences between your interest rates on loans versus lines, you begin to peel back the layers. So this gentleman managed to do that for himself, and he allowed me to work for him, right? So now that we've got this line of credit, now that you see the debts laid out, here are the amounts. These are the monthly payments, right? Monthly payment, and then the interest rates right here, okay? And down here as well. So to close out the month of February, we're gonna make a $10,000 chunk payment from this personal line of credit, okay? We have a remaining $1055 of income that's going to come in before this month is over, and he currently has about $350 of cash in his checking account. With that being said, we also have about $600 of expenses for the rest of the month of February. So if we did the math here, we took $10K out and we're making a chunk payment. What are we going to chunk at? If you were to look at these debts right here, it's very clear that we should knock out these two guys right here, these two little debts, and then the remaining of the 10K, so we got $990 that went towards this, $655 that went towards that. The rest is going to go towards this loan right here. Okay? When we do that, we drastically lower the balance, we cut off the interest rate, and we also satisfy the month's payment. Okay? Matter of fact, we're in February, so he's actually paying March's bill. He's paying March bill in advance. So therefore, when March comes and he gets his $4,000 of income, his expenses are going to be less $345, $50, and $75 for that one specific month. Okay? So when we did the math here, we got the 10K coming out. We immediately put in all of our income, cash on hand. We dump it into the line of credit, let it sit there, satisfy the line of credit monthly payment, and also cut off any interest accruing on $10,000. Now interest is only going to accrue on $8 to $9,000. Okay, expenses are going to come out. That should be our balance. Okay, that's, with interest factored in, right? Somewhere around that at the end of February. Okay. Now, coming into March, we got $4,000 income that's going to come in. Notice the expenses. Why did they drop? Because we're no longer paying that, and that for this specific month. These two got eliminated completely. This is halfway done. But we don't have that $345 payment. Okay? And on top of that, I'm saving quite a bit of money over here on interest. Okay? So expenses come out, balance. End of March. $7,700. Pretty cool. April, $4,000 coming in. Expenses, see it came back up to $2,675. That's with this coming back into play. Balance ends up right here. May. So far we've got a portion of a month here. March, April, May, income, expenses, balance. June, income, expenses, balance. $3,725 should be the balance on his line of credit owed. The rest is all space, available credit to use. Okay? When the line of credit balance is lower than the income, okay, that is an indication that we are approaching our next chunk period. Okay? So I just wrote July, income, expenses, July, right? Here's going to be his balance. His balance is literally going to be what his expenses are. Okay? He used the expenses. That's what his bill is going to be. Balance owed on the line of credit. That right there is a reason, one of the big reasons why we are able to zero out this line of credit. How is it that if we're cash flowing that and we took this much out, I mean, if you were to just do 10K divided by 12, let me know what you get, right? But look how we managed a portion of February, not even the whole month. We got one whole month here, 2, 3, 4, 5, 5.25 months, okay? And then in August, we have the available credit to do what? To make a chunk, okay? So we're going to make a $5,000 chunk. Now, why so small compared to the first one? Well, let's look at the debts, okay? When we made that chunk over here, dropped that balance down, every other month besides March, we're still paying that $345, right? $345. So his balance on the loan should be somewhere around $5K left over. all right? So we're just gonna make that simple chunk right there. Balance is gonna come up to here. Income goes in. Look at the expenses. Drops, right? 2330. Not bad at all, okay? Now, we got the balance remains right here at 5730, okay? Coming into September, we restart velocity banking, okay? We make the chunk. We wiped out another debt. No longer have that to worry about. So we've eliminated this guy right here, this guy right here. Less than a year. Wiped out that. And the line of credit is not maxed out. We still have plenty of space here. Emergency goes down, unexpected expenses, whatever the case may be, he can always pull from the line of credit. That's his new savings account. That's his new emergency fund. Things are going quite well, okay? So we've got, coming into September, 4,000, right? Going in, expenses coming out. Look at this. We're approaching the income again of 4 grand around October, okay? So income goes in, expenses gonna come right back out. Here's his balance, November. So either in November or December, we can make another chunk payment of 10 grand. Here's what's interesting. This 10 grand, where do you think we should chunk at with these 2 remaining debts left? Should we tackle student loans to just get 156 of cash flow increase? Or do you think it would be wiser to tackle the mortgage first and just deal with the 156? Let me know in the comments below. My opinion, I believe, psychologically, physically, mentally, emotionally, it is better, and mathematically better, to tackle the mortgage first so that I can come after this 728 cash flow, okay? For me to spend a whole year on this just to get 156 doesn't make sense to me. It's such a big debt for such a low monthly payment, right? I've seen other debt payments such as this, $14,345. That makes sense. Tackle that. But see, when we get a big debt like this and a low monthly payment like that, it's a bit odd, and that's usually with student loans. Matter of fact, I would like to attack the mortgage because of that high monthly payment, and I know if I do velocity banking and I keep this rhythm going, I can wipe this out in like a 2.5 year time frame really quickly, and that is exciting to me. And I know it's exciting to this veteran as well. You know, he's an older guy, you know, he's like, look man, I want to eliminate this mortgage. I'm done with it. I'm like, I'm with you, okay? So if we were to evaluate the first year from February to December, you know, or just when I factored in like the month of January, because technically I've been working with him since last year. So if we look from January to December, how much debt did he pay off in one whole year? Well, let's look at the numbers, okay? If you were to just add up this number, that number right there, okay? Take 156, times it by 12. Take the 728, times it by 12, right? So you take these numbers, that number, and then this 10K right here, okay? He'll pay anywhere from 34 to 36K conservatively in the first year. That compared to that is a very nice percentage of debt we're wiping out in a 12-month period. Would you agree? Okay, so in the second year, if we got that chunk number a little bit higher, which I know we can do, if we just conservatively paid $40,000 every single year doing velocity banking, okay, he'll be debt-free in 4 years, okay? And if he wants to go even faster, all I ask him to do for me is get $1 increase, $1 an hour increase to his income once a year or even twice a year. I know that's very doable for a lot of people, 1 to 2 times a year. He will chop his debt payoff timeline by 6 to 8 months each time he gets a dollar raise, right? Not bad. So we can really expedite this process for him, you know? And the reason why we got to this point, you know, so many people want to get to this point, but see, you don't have your numbers in line. You don't have your line of credit yet. You know, maybe you're struggling with certain, you know, circumstances. That's why it's important for us to do our homework, educate ourselves, commit, right? Commit to someone, whether you decide to work with me to do velocity banking, or maybe you hire another company, another YouTube channel out there. Listen, they're all great. They're all good companies. You got to find the one that you know, like, and trust. Over time, that should be enough validation for you to take the next step, to hold yourself accountable. Everybody needs an accountability partner. So I'm really excited for this gentleman. It's been a pleasure working with him, and we're going to continue working together, right? You know, he joined, you know, he's a Patreon, right? He committed there, right? He got his life insurance policy with me. You know, I can help you guys with that as well if you're looking to acquire a savings asset, establish your own tax-free bank, become your own banker, right? All those weird terminologies that people use on the internet, okay? Yeah, we practice that here too, you know? And on top of these two things, he's establishing his kingdom authority, right? He's making sure that he is impenetrable, okay? Because here's what can happen. This line of credit right here, this line of credit, maybe by the second year or so, I'll probably have him get a HELOC on his mortgage. Because come the second year, when we're paying this all this 40,000, these chunks, okay, it's going towards here. Straight mortgage, okay? Straight principal. Very, very little interest. Not much at all, okay? So he's going to gain a lot of equity that we can pull from, have a bigger line of credit. The interest rate will go way down, so he'll even have less of borrowing costs for him, right? And then that'll improve our numbers. And if he gets increase in his income, that'll improve our numbers even more. I mean, everything is in our favor right now if we just stay committed, right? And we execute each and every month, which is to just dump all income into the line of credit. Withdraw expenses as you need them into your checking account to pay the bills, right? Or if you want to take it a step further, you can use a credit card to pay most of your bills, or maybe even sometimes all of them for some people, not for everyone, okay? But that's an option as well. And I know he's going to practice that too here. And on top of that, once we're completely debt-free, he's going to focus on this part, the kingdom authority, using a HELOC, okay, to acquire real estate. I mean, that's what a kingdom is, really, is real estate. Land, property, value, a business, okay? So once he uses this to acquire this, he's also going to have his own personal HELOC right here, right? He'll get to a point where this will be about the same size as this HELOC, and he'll no longer have to use this, okay, and pay the bank's interest rates, okay? He'll be paying himself his own interest rate, okay? Even when he's borrowing money from his cash value inside of his life insurance policy, okay? As long as we designed it properly, which we did, right? We designed that thing properly. This is going to earn him tax-free interest, which is also going to give him the ability to use the money today while he's living to acquire real estate, right? Or business, right? Or maybe he's a philanthropist. Maybe he wants to, you know, give his time to the VA. You know, maybe he wants to help, you know, young veterans. You know, he's an older man, been through some things, has stories to tell, has experience. Maybe he can inspire young military men about establishing a kingdom, doing velocity banking, finding a group of people that you can surround yourself with to build your influence. I mean, so many things that we can do, so many possibilities and opportunities once we've eliminated and broken free from that debt, right? So I just want to let you know that it is possible, that the income doesn't matter, the expense doesn't matter, cash flow, all these numbers don't matter. It really boils down to you, right? How committed are you? Because the more committed you become, the more real the numbers get for you, right? When you become committed, I can throw your numbers on the board and we get this thing going and we get results, and you make me happy, right? You make me feel satisfied that I get to help another household out. I get to help another mom, another dad, right? Another, you know, young person that's really seeking financial help. Listen, man, you come to the right place, all right? I hope this helped. Thank you again for my gentleman here. It's been an honor serving you, and thank you for serving our country. God bless you. God bless you all. Have a wonderful day.